Yeah. It do be like that though. Anyway, today I want to share with you the result of what happened after I bought all the Bitcoin ETFs that were released. I'm going to rank them from worst to best, and I'm going to answer some of the most commonly asked questions about these Bitcoin ETFs. Because you know what's kind of crazy? On its first trading day, the Bitcoin ETF generated $4.6 billion and $10 billion by its third day. And let me just give you some context for what those numbers actually mean. Because last year, in all of 2023, there were roughly 500 ETFs that were created. Now, by the way, if you're new here, ETFs are just securities that represent bundles of things that go inside of them. So it's represented by one stock that represents many, many different things usually. Now, on Tuesday of this week, all of those 500 ETFs that were created in all of 2023 had a combined trading volume of $450 million, the highest of which had $45 million. In comparison, Bitcoin, which has 11 spot ETFs in a single day, did $4.6 billion. That's 10 times more than what the 500 did that were created in all of 2023 did on Tuesday this week. And that makes Bitcoin the single most popular ETF asset class of all time throughout the universe in perpetuity, indubitably, except in Indiana. But what's interesting is what happened to Bitcoin's price after the ETF was released. Because on the day of release, Bitcoin's price did almost nothing. And over the next few days, it went from $46,500 down to $42,500. Why did it do that? How can that much money circulating around the ETF still make Bitcoin lose value? And the answer to that is something called trading volume, which represents both net inflows and net outflows together, meaning money that's coming into the system and money that's leaving the system. So that $4.6 billion on its first trading day represents both purchases and sales. And the biggest culprit for the net outflows, or the most amount of selling, came from an ETF ticker symbol GBTC. Gray's Sports Almanac strikes again. No, it's the Grayscale Bitcoin Trust, and why it had the most amount of outflows is because of a very complicated process. That's not the point of this video, but since we're all nerds here, what had happened is GBTC went through a complex conversion process into a spot ETF, and when they did that, it shrunk the gap between the price of itself, the ETF, and Bitcoin, the asset. That's called the discount to the NAV, or the NAV, the net asset value. Basically, the people that were buying GBTC before it was converted were buying the ETF at a discount to Bitcoin's price. In fact, from February 2021 until January 10th, 2024, it was cheaper to buy GBTC than it was to buy Bitcoin directly. And since there's been a lot of people that have bought this ETF over the last few years at that discount, they've been selling that ETF to collect their profits before the discount window closed. Now, people are still selling out of their ETF because they're also realizing GBTC is extremely expensive because they charge a very fat, juicy fee. But the point of me trying to tell you all of this is just to show you that all of these spot Bitcoin ETFs are not created equal. And I bought into all of them just to show you how well they've done, and I want to answer some of the most commonly asked questions that I saw about them, so let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for more Bitcoin videos. Anytime I make a Bitcoin video, it's like, oh, enough with the crypto video. And then when I don't, when crypto video? You can't win. It's the internet.
All of the time.
Anyway, before I show you how these Bitcoin ETFs have done, I want to put in context expectation versus reality, because I think a lot of people thought that when the ETF was going to be approved, Bitcoin would skyrocket to $100,000 right away. But the truth is, it's not going to. And I want to show you that by comparing what happened to gold when it was first securitized and given its own gold spot ETF. When it was first launched, the performance wasn't that great either. It didn't skyrocket because from November 18th, 2004 to the end of 2004, gold's price went down by about 1.4%. The first year of gold, the price went nowhere. It just went sideways. Now, the next year in 2005, the first 5 months of the year, gold went down and it went down some more. And it wasn't until the third quarter of 2005 that gold's prices went up, starting at $435.50 an ounce on September 1st and closing the year at $513 per ounce. That's a price growth of over 20% in a little over a year after the ETF was launched. But the point is, just because something gets an ETF doesn't mean the price is going to skyrocket, and it's not going to get there in a straight line. So now let me just show you the best of these ETFs, and I'm going to be judging them based on the price growth as well as the lowest expense ratio. But first, a quick shout out to Policy Genius for sponsoring a portion of today's video, because as we start the new year, it's the perfect time to think about life insurance to protect our loved ones. Policy Genius makes this easy by helping you compare life insurance quotes from America's top insurers at the best prices. With Policy Genius, you can find life insurance quotes that start at just $292 per year for $1 million of coverage. Some options offer same-day approval and avoid unnecessary medical exams. Even if you have life insurance through work, it might not be enough. Policy Genius experts can guide you to the right policy that sticks with you and not just your job. But what I personally like about Policy Genius is their commitment to unbiased advice. They work for you, not for the insurance companies, ensuring that you get the best policy for your needs, and their thousands of 5-star reviews speak for themselves. So head on over to policygenius.com/Andrei Jikh, or just click the link below down in the description where you can start off the year right with a peace of mind, and you can save money, save time with the right life insurance policy from Policy Genius. Thank you, Policy Genius, for sponsoring a portion of this video, and now let's get back to it. All right, so a quick recap. I invested $100 across the board into each of these spot Bitcoin ETFs on January 11th, the day after the ETF went live. Now, unfortunately, 2 of these ETFs, IBIT and DeFi, I was not able to buy. I don't know why. I blame Robinhood. I reached out to them and their support team, and they admitted to me that it was a fault on their end that somehow caused their systems to cancel some of the orders, even though I didn't cancel them. They weren't able to help me because classic Robinhood things. The good news though is I was able to use my portfolio tracker instead to plug in the missing data and backtest it, which you can find in my Patreon link down below, where I simulated what would have happened if I did buy those ETFs. So from worst to best in terms of what my $100 is now worth today, starting with the worst, is ticker symbol DeFi. That one lost me over 15%. Well, technically it didn't lose me anything because my order was never filled, so that's a happy accident, but had I actually put in $100 into it, today that $100 would have been worth $84.84, which, as you're about to see, is by far the worst performing one. Coming in at 9th place is BlackRock's IBIT, which lost 12.6%, and I would have ended up with $87.37 had I bought it. Again, that's a crazy coincidence because the 2 worst performing ETFs were exactly the 2 that I was not able to buy because the orders weren't filled, which is good for me, not so good for everyone else, because IBIT is leading the way in capital inflows. The majority of people are choosing to put their money into IBIT, which is BlackRock's ETF, and I'm guessing that's because BlackRock is a big name and people are choosing to trust them the most, but more about that later. Coming in at number 8 is ticker symbol BITB, which is Bitwise, where it lost 8.34%. So now $100 is worth $91.66. Number 7 is FBTC, which is Fidelity's ETF, and this one lost 8.2%. So that's $91.80. Number 6 is ARKB, which is Cathie Wood's Bitcoin fund, and this one lost 8.01%, which leaves me with $91.99. And now we get into the top 5. Now number 5 and number 4 are super close. Number 5 is ticker symbol BRRR, which lost 7.88%, and that leaves me with $92.12. And number 4 is EasyBC, like easy peasy, which lost only 7.85%, which is $92.15, so that's only 3 cents more. Now 3rd and 2nd place are exactly identical, losing exactly 7.73%, and that's ticker symbol HODL and BTCW. So here's the breakdown of what actually happened. GBTC and DeFi was the worst. DeFi lost the most amount of money for me, which is especially worse when you remember that their expense ratio is super high when compared to the competition at 0.9%. But out of all of the ETFs, they have the highest expense ratio at 1.5%. Their argument for why they're charging people so much money is because they have the most experience of buying and holding Bitcoin, and they have the most liquidity. That's why they're charging a premium of 100 basis points or 1% over the competition. But still, that's really expensive. Now, EasyBC, BTCW, and BTCO have pretty close expense ratios at 0.29, 0.3, and 0.39% respectively. But even though BTCO had the highest expense ratio out of those three, it also did the best out of all the ETFs. FBTC, BRRR, IBIT, and HODL all have the same exact expense ratio of 0.25%, but what's interesting is their performance varied a lot across the board, with IBIT doing the worst of them and HODL being the best of them. And then BitB and ARKB have the lowest expense ratios at 0.2 and 0.21%, and their performance was really, really close. But the question is, which one is the best? And the best one, combining the price as well as the lowest expense ratio, the best one was from Invesco, ticker symbol BTCO. Now, if you want to prioritize the lowest expense ratios, a close second and third is BITB and ARKB. Now, if I was to advise myself on which one I would buy with my own money, the one I'd go for is probably Invesco's BTCO. But then I would have my money in there for a little bit, and while it's in there, I would do everything I could to learn about how to self-custody my Bitcoin, and then hopefully once I've learned enough and I'm comfortable with it, I would sell it and then use that money to buy real Bitcoin with, because apparently someone described owning a Bitcoin ETF as kind of like you have a girlfriend, but she lives in BlackRock's apartment and BlackRock sends you a picture of her every quarter and then they charge you a fee to take care of her. And I guess that's kind of accurate. Some people just don't want to deal with the headache of being hands-on with their assets and investing strategy. So anyway, let me just tie all this together and show you what it means. If my parents were to ask me, Andre, I don't want to learn how to self-custody Bitcoin, I just want to buy the ETF and put it in my 401k, which one is the best? I'd say, I have no idea. I wish I could tell you, but the truth is all of these companies have different strategies to how they approach this, and some are not as battle tested as the others. Like for example, GBTC is extremely battle tested. They've been around the longest, they have the most amount of money and liquidity, and they hold the most amount of clients in this case, which is great, but they also charge the most amount of money. Is their experience worth 100 basis points or 1%? Let's all pretend Bitcoin continues its growth rate for the next 5 years at 25% CAGR or compound annual growth rates. That becomes expensive. Sounds like it's not worth it. But what if, God forbid, in the future, Coinbase gets hacked and all the coins are stolen? Most of these ETFs hold their coins through Coinbase. What happens then? Do people get their money back? Even if those coins are stolen, technically, no one has claims to the coins themselves. Instead, customers have a claim to the security, the digital paper, the ETF itself. So as long as people are within the insurance limit of SIPC, then they should be protected and we're good to go. Unless the SEC steps in and Gary Gensler's like, technically Coinbase is not a regulated exchange and all your coins are mine. They've done that in the past. They could do it again, and that's a risk. So then does that mean we should be buying FBTC through Fidelity? Because Fidelity holds the Bitcoin themselves, and they are a regulated institution. So from a regulatory perspective, they're the safest. But they also have the least experience holding Bitcoin. They have less experience than Coinbase and some of these other companies. So then which one do we pick? I don't know the answer. No one knows the answer to these questions, and most people won't even think this far ahead. So the fact that you're watching this video means you're a nerd and you're amazing, but I'm just not smart enough to give you a definitive answer. I don't know. All I know is this. All the numbers I've shown you throughout this video have been based on losses. And that's how I've shown you which one is the best because it lost the least, which I guess is cool, but I also need to wait for the data to go green so I can show you which one makes the most. Because it's not correct to assume that the best one is the one that loses least. Because the one that loses least could end up making the least. And the one that loses most could end up making the most. So literally the worst could be the best. It's unlikely, but it's a possibility. And the most ideal one, the one that we should be looking for, is the one that loses least when Bitcoin's down and the one that makes us most when Bitcoin's up. But for that to happen, I need more data. There's just so much more data that I'm waiting for. But the point is, I don't know the right answer, but I hope I've given you the right framework of how to think about this so you can ask the right questions for yourself. But also stick around because I will make a guide on how to self-custody your Bitcoin, and when it's ready, and it's gonna take me a while to produce because crunching these numbers is a full-time job, I will leave a link down below because it's just me. I'm a one-man show for my entire YouTube channel. It's just me and ChatGPT. Are you not entertained? I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab your free stocks. Links are down below, and to go track them automatically with a spreadsheet link down below in my Patreon. Love you. Thank you so much for watching this video. I'd love to see you back here on Monday and Friday, sometimes a Wednesday. See you soon. Bye-bye.